Good morning, welcome to the ADS Securities Markets Update. We'll start our video today with a look at the U.S. jobs report, which came in line with ADS Securities estimates. The economy added less than expected jobs in July, while the unemployment ticked higher. However, the general consensus were to add more than 230,000 new jobs and a stabilization in the unemployment rate. However, the economy added 209,000, while our estimates were around 200,000, and the unemployment rate indeed ticked higher to 6.2%, up from 6.1%, as the participation rate increased slightly on higher consumer confidence, leading more and more workers to rejoin the workforce again. The key event in this jobs report is the average hourly earnings, which showed no growth in July, while it had been anticipated also to rise by 0.2%. The year-over-year also stabilized, or unexpectedly stabilized, at 2%, despite the fact that it had been anticipated also to rise by 2.2%. As the average hourly earnings disappointed, this eased the speculation for a sooner rate hike by the Federal Reserve, leading to another wave of selling off in the US dollars across the board, while the GBP, or the British pound, continued to lag. And on the other hand, personal spending and the personal income came in line, or came in with a disappointment figure, while the ISM manufacturing PMI improved. However, the manufacturing inventories tumbled further, which suggests that Q2 GDP will be revised sharply down on August 28th. As for today, there are a few economic releases across the day in Asia and Europe, while the US session will come in with no data sets, which may lead to the market to trade within a tight range ahead of a busy week. In Australia, retail sales came in much better than expected, rising by 0.6% in July after a decline of 0.3% in June, while the estimates were to rise by 0.3% only. Moreover, the ANZ jobs advertisement increased by 0.3% in July, comparing to a rise of 4.4% in June. Going forward to the European session today, we will be focusing on 4 economic data sets from Spain, Switzerland, the UK and the Eurozone, which may have a notable impact on the markets. In Spain, unemployment change is expected to decline by 116.3 thousand in July, comparing to a decline of 122.7 thousand, which would be the sixth monthly decline in a row. In Switzerland, manufacturing PMI may improve to the highest level since 6 months, also rising to 56.2 in July, up from 54 in June. In the UK, construction PMI is expected to decline slightly again to 62.1 in July, down from 62.6, along with the other PMIs that were released last week. Finally, the Eurozone PPI is expected to remain unchanged with no growth in June after a decline of 0.1% in May. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching.